Welcome to my mortgage career blueprint. Before we go any further, my name is Ash Borland. I'm a mortgage business coach. So I help mortgage brokers scale their businesses from, say, high 5 figures up to 6 and even 7 figures using social marketing, using behavioral economics, and using all these different sales tactics that are going to take you to the business you want. But in today's module, in today's course and program we're doing today, it's not about that. This is actually what we're actually going to be focusing on here is we're going to be looking at the mortgage career blueprint. Now, why have I created this? Just to give you an introduction as to what this is about. The reason I've created this is because I started looking around and realizing that lots and lots of people are trying to get into the industry. And when they're trying to get in, there isn't enough information out. There's a bit of information about CMAP and things like that, which we'll talk about in this today, but there's nothing really outside of that. And I started to create a bit on my YouTube channel about this. I've had some great response. And so I decided I'm going to create this course like my mortgage marketing blueprint, which for anybody who doesn't know me, that is the flagship program that I have, is the mortgage marketing blueprint. So if you're thinking about becoming a broker as well, definitely check that out too. But this one here, these entire modules here, or this whole thing, it's not really a module, it's going to be a masterclass. And this masterclass is going to cover effectively everything you need to know and from getting into the mortgage industry and then progressing all the way through to the point where if you want to go self-employed, that's the goal of this. So we're trying to get you to the point where you think, okay, I'm ready to go self-employed. I am ready to take that leap. That's the idea. And so for me, ultimately, that's what we're trying to reach with this. Of course, once you go self-employed, that's where my actual job and what I actually do day to day, that's when I can actually help you. And so that's where the mortgage marketing blueprint and any other blueprints that I create, because I make different blueprints all the time, any other blueprints I create, they will then help them in that role. So that's what we're going to be doing today. Now, before we dive any further as well, please do go and follow me on Instagram. That is at Ash Borland. Always happy to engage with people on there and connect people on there. And if you've got questions, that's the best place for you to reach out to me. I'm very open and happy to answer questions on there. So just drop me a DM with a question about this or about what you can listen to. That's the best place to reach me. So without further ado, let's dive in to the blueprint. So first of all, let's talk about an introduction to mortgage brokering and what it actually entails. So let's talk about the role first. So the role, effectively as a broker, your job is to facilitate mortgage agreements between lenders and borrowers. That's the top level kind of part of the role, is this idea that you are trying to effectively broker a mortgage. That's it. So you're going to just, someone comes in, they need a mortgage, and then what do you just literally go and look at a sourcing sheet, and then you find, or like sourcing software, and then you find the deal that works for them, and you will broker between. That's why it's called a broker. Sometimes it's referred to, by the way, as a mortgage advisor or a mortgage consultant or a mortgage expert. All of them are exactly the same thing, so don't get too caught up and worried about that. They're all exactly the same, but that is what the role entails, top level. Now, let's look then. The next thing we're going to talk about when this is key traits. So the key traits that you really need to have, though, as a mortgage broker to be successful, if this is the type of career you're thinking of doing, is you need to think about, you have strong communication skills, very strong communication skills, because you're going to be dealing with people in a very emotional state. You're going to be dealing with people in high stakes. People are buying houses. There may be debt consolidation. They may be getting divorced. It's not just that, it's fun, I like to do this. It's not that at all. I like mortgages and money, and it's not that. You absolutely need to make sure that you're aware of the gravity of the task that you're doing, and strong communication skills is important. In fact, it's one of those things I actually say to brokers, especially getting into this space. If you're thinking about being good at it, get good at communication beforehand, because it will serve you a long way down the line. The other thing you have to be good at is negotiation skills. So negotiation skills, I would put that into negotiation and sales skills. So the ability to be able to negotiate the deal to be more favorable for your outcome and your desired outcome, be that for you and your client, be that talking a client into taking your service, taking the insurance or any other supporting products. and or talking with an estate agent to get your client the more favorable view of being able to get the property, because sometimes as an independent broker, you might have to, and even if you're in employed or self-employed roles, some employed roles will mean you have to work closely with someone else in the team and negotiate what works best for the overall business. And so this can be, negotiation skills is vital, because otherwise you will be walked all over, because it is very much in a sales environment, and especially in those employed roles. Oftentimes, to look after your client and do the right ethical thing, you need to have strong negotiation skills. And the final one you've got here on the key traits we have is attention to detail. So as a broker, your job is going to be to effectively, look through all their documents, look through everything that they've got, assess whether or not they can afford it, and then you're going to submit that to the lender. The lender then will put it under underwriting, and they will look through the stuff you've submitted, and hopefully it matches. That's what the idea is. If it doesn't match, the case will be declined. If too many cases are declined, you can be struck off the lender's panel, and then you can never work with them again. So a detail is important. If the detail's wrong, let's say it's wrong for any reason, that could be a massive financial or physical impact to someone's life. So this is it's not like life or death, but it's pretty high stakes. And so detail and attention to detail is so important, so much more important than people actually think about when it comes to mortgages. That's why detail is important. And if you're not, because we're a highly regulated environment, regulated by the FCA, you will be pulled up for it. So very important. And then let's look at the last bit about this role is the career path itself. So what do you do from progression from a trainee to a senior broker? Quite simple. What you will do is, most of the time, you will start off as a trainee in some form of capacity. And let's say if you were going down an employed route. So if you're going down the employed role, and we'll talk employed first. If you're going down the employed role, what will happen is you will normally be a trainee of some sort while you have to get CAS status. So competent advisor status. It's not CAS status, but it's CAS, which is competent advisor status, because otherwise that'd be CAS. It's not that. So competent advisor status is what is required once you have passed your exams, your CMAP exams and or equivalents. Now, the thing that's important with this is that you can only get CAS if you're supervised by somebody else who has a relevant CAS too, someone who has actually already got CAS, somebody who's already been proved that they are compliant, that they are competent. And so you have to find a way to get that. There are different ways around that. I actually have a podcast, it's actually an episode on my YouTube channel, which talks about how you can get CAS as a self-employed advisor straight off the bat, going straight in. It's very rare to do that, by the way, very rare, but there is a firm there. So go and check that out on my YouTube channel. I will try and link that into here as well if I get the links. And so we need to get CAS. Now, how you can get CAS, let's say you get it in an employed role. If you join something like a Connells or a Countrywide, and I'm just going to use Connells, it's an easy one for me, just an example of what it was like when I did it. I'm not saying it's now. You would go in, you'll be your trainee, you will go and get your CAS status, and then from there, as you progress up, what would then happen is you would then move through, and you would move then to a normal mortgage advisor. So you would then just be advising normally. You would get higher commission splits on that. Many corporate companies then will have different titles within that. They all do the same job. So they're all still doing mortgages and they're all still doing the same job. But you might have then a senior mortgage broker, and then you might have mortgage director, and then you might have mortgage executive, and all these different names within a company. And that all that is going to signify, by the way, is pay scale and pay grades. So as you go through, that'll be higher basics, higher commissions, maybe a better car. So that's what they will signify. But really, the role of a broker is a broker. Now, the career path from there, if you become a really good broker and it's like, what do I do now? The career path from there can take multiple different routes. So if you are a mortgage broker at the moment, then the route you can choose at this point is you can go self-employed, or you can go management. Dyslexic, cannot spell. So these are the two routes that you will have as a career path to choose from. So you'll either go down the self-employed route, in which you will go off, you'll set up on your own, you'll build your own business, whether that's a solopreneur, whether that's building other weird and wonderful things out, or you'll go into management. And management, there are other then career paths from there, but you will effectively, you're going into your what they call here, it would be non-advised. So non-advised. So you're no longer advising at that point. And why is it called non-advised? Because, as like I said, at that point, no more advice is being given. It is not something that you're not going to give advice. So when I say it be non-advised, this might be management, it could be training, it could be a BDM role, so business development manager role. So you might move into different roles from that, but you're not going to be advising anymore. And these are the two main splits, and you see this happen quite often as to which one you want to go down. I myself went down the mortgage broker route, then I went the self-employed route, and funnily enough, then I became I'm still self-employed, and I have my own consulting practice, obviously, as a coach and consultant, but I went into the non-advised, self-employed, kind of like a hybrid role, really. But there are two different routes. Both of them are very lucrative, and they can both be really good for your career. But it's just, you'll find out as you go through which one is right for you. And I think that's what's so wonderful about this career, is that you do, as you go through this, start to find things that are like, okay, this is a good career choice for me. And you can really grow and develop into it. It's not just become a mortgage broker and only be a mortgage broker, even though that's what it can feel like, definitely at times, but it's not that at all. So let's unpack some essential skills to what you'll need to be successful in this role. So the first one we have, as I've said, is communication. And I've touched on some of these already, but let's dive deeper into this. So communication is so important. In fact, if you're not good at communicating, as I've said, it's going to go down very badly. You also are going to need, as I've said already, a good negotiation skills. So good negotiation skills are going to help you stand out to negotiate the best deals for your clients. And then this is going to make you a solid salesperson, as we've said. But the other two I want to talk about on top of these is analytical skills and resilience. So for analytical skills, it is something that as the market and as you want to progress further in your career, the more analytical you can be around these things, the more value you're going to start to bring to clients, especially as the market changes and goes. So we've been through times where the market has been quite up and down. Swap rates are going up and down, interest rates are going up and down. And so because of that, what starts to happen is that the brokers who are very analytical can start to see trends and they work very well, versus the ones who are not very analytical and just fly by the seat of their pants, not doing so great. So evaluating people's financial situations accurately and being able to see how the market is moving will give you an advantage as you progress deeper down, because there will be certain lenders who will do certain things and you need to know how that works. Now, don't get me wrong, there are lots of brokers out there who don't have those skills and they don't act like that, but that doesn't mean that they are not, it doesn't mean that they're not, well, it doesn't mean they're not going to be successful, but it means they're not going to be the best. When you go down that route and you get really good at being analytical and doing the best for the job, you will be that, as I said before, that six-figure earner, because that's what it takes. You really do. If that's the career you want to go down, that's the thing you have to look at. And the other one is handling challenges and setbacks. The resilience of a broker is vital. It's a yo-yo kind of roller coaster career. It'll feel like feast and famine, because you're also at the whims of the market. Something bad might happen, the market might slow down, then all of a sudden, and you'll feel, oh, what's going on? Nothing's happening. And then all of a sudden, bang, there's a big move forward and there's loads of people there wanting to work with you. You need to be tough. If you're not tough and you don't get tough, then you are going to struggle, like just really struggle. And it's one of those things that even me telling you this on this masterclass, you will not learn that until you're in it. I can just say it for myself. I've been there. It's like the trick is learning to ride the wave. If you can ride the wave, though, you will be very successful, because the thing with that kind of emotional roller coaster is you start to realize this is the job. The job is to be able to manage those ups and downs no matter what. And I think that's the bit that many of us, me included, by the way, when I first started, I was terrified. I remember thinking, how am I going to do this? And now I just take it in my stride. It's absolutely fine. So you do need to be resilient. You need to get strong and tough. If you're somebody that wants a steady, secure income, even in an employed role outside of a bank, because banks are a different thing altogether, you are really you have to get the stomach to try and be strong and resilient. Yeah, it's not easy. So what qualifications do you need to be a broker? Most of you who are watching this already, you probably already have these, but just a very quick overview of the qualifications needed for the ones who joined this who are just thinking about it. You do need to have to be a broker, you do have to have qualification. You can have one of two qualifications that are available. You have CMAP, which is, and both of these do the same thing. They both give you a certificate in mortgage advice, but one is CMAP. It's the most common one, broken down into 3 phases: CMAP 1, 2, and 3. And you do 3 exams for that. That is the main one you'll see. So if you're looking for anything out there, Google CMAP, you'll see that all the time. And then the other one you have is the CII exams, which is the Chartered Institute for Insurers, or is it Chartered Insurance Institute? It's one of those two. Weirdly, that's the one I have. That is 2 exams, but it's effectively CMAP 1, 2, and 3 crammed into 2 exams. So they're larger exams, but they're just taken in 2 sits as opposed to 3. And that one, again, is absolutely fine. They do the same thing. The only difference between the CII versus the CMAP is the CII can, if you take it correctly and do it in the right way, can also be moved into a financial diploma, so a financial advice diploma, such as pensions and investments and wealth, if you wanted to. I only had that because most companies, or the company at the time I worked at Connells, and that's where I got mine from, they were using CII. I think just because it was 2 exams instead of 3. So it was easier for them it was less time for their staff to be not working. So that was really the only reason I had mine. Both of them are just as good as each other. There is no need for you to have either or. But as I said, it is absolutely important that you choose the one you want. Now, what I do want to talk about in the next one is about studying for your exams, because studying for your exams is very much something that I see lots of people struggle with. Now, first off, straight up, shout out, Charlotte at Future in Finance is who I recommend if people are looking for studying their CMAP exams. She's wonderful. I've had Charlotte on my Mortgage Mavericks podcast a couple of times now and massively support what she's doing there. I think she's a wonderful person and very skilled at what she does. As someone who's dyslexic myself, and she creates content for people who are dyslexic and do have ADHD, is brilliant. So if you're trying to study, go ahead and check out her podcast and material. That's Future in Finance. But for just a basic overview of people who are trying to study for their mortgage exams, this is what has always helped me when I was doing mine, and also when I study for anything now I'm taking still. And I think this is important. First one you have is time management. These exams are not hard. It's not easy, sorry. They are quite hard. And so you're never going to pass them if you do not study. So you need to make sure that you are doing, like, setting time aside to read them. The manuals they're dense. They are thick. I remember doing them and they're like, yeah, they're thick. So you do want to make sure that, and also, by the way, if you've never had any financial experience, your CMAP 1 or CF, which is CII exams, the CF one, they are like just a complete foreign language. You're talking about gilts and yield. It's a lot. It goes into the whole thing. Now, obviously, somebody's been in finance for a long time, over a decade now. It makes all sense to me. But I remember, actually, I remember picking that book up for the first time. I was in a estate agency at the time, being like, "What on earth is this?" I had no idea. It was literally like a foreign language. So you will need to. They're tough. The second one is not as hard. The second half of that exam, so the 2 and 3, if you're CMAP, is not as hard. But if you do want to put that time management aside in order to get it, so create a study schedule. Try and study at least every day, in my opinion, or at least a couple of times a week, but every day is my advice. Incorporate active learning. So it says engage through practice questions. I'm a big advocate of that. Active learning makes a huge difference. Study questions and speak to people. And then resource utilization. There's a couple of things to this, and that's what it says about using textbooks, online materials, and study groups, where Future in Finance comes in here. But honestly, I would say immerse yourself in everything around there. There is tons of content from me. There's content out there from Paul Archer, who's another person that I know who's very good. And there's loads out there. And like I said, Charlotte, and even just like I said, I don't do CMAP study stuff. It's not my bag. Like I said, I'm a business coach. I'm here to take you once you've learned the job, so to speak. But there is lots of content you can learn from the stuff we talk about, even in my stuff, that's going to help you. Like the interviews I have, for example, with brokers and people in the industry on the Mortgage Mavericks podcast, these things will help you immerse yourself into the world of a mortgage broker. If you're in that world of a mortgage broker, the studying becomes much easier, I think. And I've had that actually from people who have passed the CMF exam saying that their podcast, my podcast, has helped them keep going forward because they feel like there's light at the end of the tunnel of what they're trying to do. So I would say if you're looking to be successful at this, then absolutely start to immerse yourself in the space. It's going to make your life a lot more enjoyable while you do it because you feel like you're working towards something. So now what I want to talk about here is that's all the exam stuff, but what do you do once you've passed your exams? How do you get that job? So let's talk a little bit in this part, about job searches and job search strategies to be specific. So first thing I would say is if you're looking to go employed, and that's where we'll focus on this, like I said, there's other ways within the non-employment, which I'll talk about in that podcast I mentioned. But if you're going down the employed role, first thing to look for is the job boards if you're looking for a job. So the job boards, what I'm talking about, they're those Indeeds, all the other things around there. The corporate companies, so your L&Cs, your Connells, your Just Mortgages sometimes, and then others out there, obviously, but they're the main ones. The L&C and Connells are going to be your two big ones. They will post job opportunities on their board all the time. So they're going to be your best options to get in. Now, what you'll find is there will also be jobs being posted all the time for mortgage brokers, like they're always up there. But if you haven't got CAS, which I'm guessing you haven't if you're watching this, then oftentimes they'll throw you away. They'll probably say you need 2 years experience. So with this, what you do want to look at is, I would say, if you're trying to get into the industry and you really want to go at it, one of the best routes in is doing these corporate companies. So because you'll get a really good access to how the job is ran, you'll have a ton of lead flow, and you will just get to learn the job before you can then choose to go out and go down the career paths you want, as we've said. So job boards, absolutely fine. Now, a little trick with this, some people don't know this, but if you are wanting to get a job and you apply for an estate agency job within something like a Connells or a Countrywide or some sort of Sequence is another one. So they're all part of Connells. So there's Connells, Countrywide, Sequence, Sharman Quinney. There's all different brands under the same big, massive umbrella. Estate agency roles can also lead into mortgage roles. That's actually how I got mine. And that's how I've got quite a few people I knew when they join and say, look, I'm happy to be an estate agent, but I want to be a broker. I'm doing my broker exams. That's something that's quite good. And depending on your financial situation, that can be a really great way in because they'll employ from within and they'll promote from within. So it's a very good way of doing that. But definitely keep an eye out for those type of roles. So that's first layer of doing it. The second thing you can do is you can network. So there are tons of networking places. You can do things that are local. Now, networking ones, for example, this is going to be more networking within the property groups. So I would say a mortgage group. So if you go Facebook, there's lots of groups in there. CMAP study groups are okay, but if you go into the mortgage broker, so there's the Mortgage and Protection Lounge is the one that I know. Jamie French runs that. He's great. And like that one, there's tons of people who talk about job opportunities there. You can ask, I'm looking for a job. This is my situation. People will respond, especially if you engage and ask questions. So the networking, and then mostly, and it says attend industry events and conferences. You can do that too. There are tons of events and conferences around all over the country, the mortgage events. You've got to have guts to do that though. I would say within this though, I do think the biggest way to do it is by doing Facebook groups and getting well known in the Facebook groups. And if you get well known in the Facebook groups and then ask for a job, people will most likely either give you one or point you in the right direction. And then you then have the LinkedIn side of things. And so I've put with LinkedIn, the thing with LinkedIn is this is really good if you're trying to, again, engage with people who could be of use to you in regards to employment. Now, LinkedIn will be different to the networking one because networking, you're genuinely networking with just people within the group and or going to events and getting to know these people with the hope of just building that network and hopefully somebody knows somebody can give you a job. With LinkedIn, what you would do here is you would strategically choose the right type of person. So if we take that Connells example again on those corporates, so Connell, the reason I'm saying Connells, by the way, it's Connells Group. So it's Connells, Countrywide, all those other things I've said, all those different trading styles. The name they use is an MSS, which stands for Mortgage Services Sales Manager. They are the person you want to connect with locally or within that kind of 100, not 100 mile, but like a 50 mile radius of your house. The MSM are the people who have the decision to employ. And if you have an MSSM and you add them and you send them a message on LinkedIn saying, hey, I've got my CMAP, done my CMAP, I'm ready to go, I would love to have a job with you, let me know if any opportunities come available. Those people will have a list, because I've worked there, I worked there for a number of years. The good ones will have a list of people who've reached out to them, because when somebody leaves, and the churn on those companies are very high, when somebody leaves, what will happen is they will then bring somebody, they want someone they can replace quick. If you have CMAP or CMAP equivalent, then you don't have to go through all a training academy, which means you can just come in, you can go on a 2-week induction course, and then bang, you're off. They don't have to worry about everything else. So that is really useful for them, because it means you can start potentially earning their money faster, which is why it's valuable. So making that person aware that there is people out that I'm somebody who's got the qualification and want to go ahead, that's really useful. And again, not spoken about enough, I think, is that these LinkedIn ones, if you do that, you'll do very well. Another one is LinkedIn recruiters. Marcus from NRG, he's like C-suite and stuff like that, so I wouldn't probably go down that route, but he's like a great example of, I'd connect with Marcus. And there are tons of other people there. Rainer Recruitment is another one. But go and find like financial services recruiters and see what's going on, because the more you get to speak with these recruiters and say, look, hey, I'm CMAP qualified, I'm looking for a job, blah, 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 then what will happen is these people they have the jobs. So this is why I say these 3 ways of doing it. Job boards, great. Networking, getting known in those. If you're wanting to go down the independent route and you want to go work for a self-employed small mortgage firm, that's a great route to go down. But you want to do that by, like I said, attending those Facebook groups and getting to know them. If you want to go down the corporate route and get jobs, but the jobs aren't available, go down LinkedIn, add those MSSMs and talk to them, and or add the recruiters like Marcus and Daniel, who's from Rainer Recruitment, and you will be able to get more foots through the door, and then people will start to see you. It really is that vital that you make sure that you're known. If you don't make yourself known, people will not go to you. It is that important. So we won't touch much on this, but let's talk about CV a little bit. So CV, when it comes to your CV, you want to emphasize the relevant certifications and training at the top. So this is, like, again, very useful to have, that if you've got any degrees or anything like that is relevant to your job. And I've done YouTube videos on this about you don't need a degree and things, which is true. But if you've got a degree in business, it's going to look pretty good. If you've got any other qualifications, then, or for example, like with myself, when I worked in the estate agency, property, the relevant qualifications and or experience, put that at the forefront and try and find ways to make it relevant. So I often will say, for example, my background before doing all of this style of things was in performing arts, and I worked in performing arts. I was a professional performer and teacher in that space, and that for me, I would often say this is what, like, I was able to speak to 1,000 people, perform in front of 5,000 people. Like, I was like, I'd have these qualifications to make it very relevant. Now, with the rise of AI and ChatGPT, you can do this really easily. Put in all your stuff and say, write me a great CV. But this is the type of thing you want to do, and focus on these. So make sure you highlight your qualifications, make it really relevant to the job. Don't just pump out like, here is me working at Tesco's. It doesn't work. You need to make it really relevant. Now, the other one here, showcase your skills. Focus on the communication and analytical skills. I've spoken about it so many times already throughout this. This is vital. Make sure you focus on these in there. You hammer it home that you are good with communication. You're good at analytical. Why is that the case? I've said this so many times before, but the job is a weird mixture of both analytical and sales. So it is very charismatic, good communication, people forward, like social job, then also very analytical, very data driven, very compliance and accuracy. Weird, because it's like a hybrid of an estate agent is that socially crazy, upfront, but a bit all over the place role. And an accountant is the other side, which is very analytical, but maybe a bit boring and a bit dry. It is a mixture of the two. That's the best way I can describe it. And you want to make that very clear to the employer. That's what you're good at, because anyone who's employing you will have done the job long enough to go, we know what we're looking for in these roles. And that's what we're looking for. So please make it very clear to the employer that you're good at both of those things. If you try to just focus on one, you will do yourself a disservice. And then the other one you have there is include achievements. So quantify successes and contributions. If you've got a sales background, talk about how, include in there what you've done within that. So any sales backgrounds, any examples of things where you've overcome something to achieve a high level of success. Anything really with achievements is what we go back to the beginning. You're trying to show resilience. You're trying to show that you are somebody who has pushed through when others maybe gave up. That's what you're looking for. So qualifications is showing that you are somebody who has experience to be able to potentially handle this role. Skills is showing that you have the aptitude to be able to maybe jump between the two very needed kind of personality traits for the role. And then the achievements is showing that you are resilient enough to overcome and still keep going and you're not a victim. That is what you're trying to get across in your CV. Like I've said before, your CV can be many different things, but you do need to make sure you've got that across. That's how you're going to stand out. You can probably get a job without this, but this whole idea of this masterclass and very much a deep dive into this is to show you that all of the things you should be doing if you wanted to get the best possible outcome and get the job. So this is what I do for interview prep. So interview prep, I would research and learn about the company and the industry trends as much as you can. Learn about the company, learn about what they do, look at how they work, and think about how you could even make it better or how you could fit into that culture. Then practice, write the questions down, practice it. There was a great guy that I interviewed many years ago who was a NLP fear specialist. So it's how to overcome fear. And he said, don't practice till you get it right. Practice till you can't get it wrong. Don't just walk in and wing it. Practice your answers, rehearse your answers, make it feel natural. If you want to be a mortgage broker and you want to do well in this role, you need to practice. It is so important because this is an income earning opportunity that many people don't have. It's one of the very few roles where you're able to make high six figures without a degree, and quite relatively easy with some skills and some time. So put the effort into it. Prepare for it, gather all the documents you need, get all the references you need, any proof of those things we spoke about earlier. So the proof of how you overcome certain things, bring that to the meeting. Absolutely bring everything in. And then final one with this is the follow up. Once the meeting has taken place, you've done the interview, follow up with a thank you note, send them an email saying thank you, send them also, and this is what I would do if I was really on it, is if I was doing this again, is I would send them some extra information, say, oh, I didn't bring this up in the meeting, but X, I was thinking about this afterwards and you said this. So in other words, what that shows is you're still doing extra work after the meeting took place. And then you're just like, you said this, it got me thinking, here is something I would suggest as well. That's going to help you stand out because it shows that you are thinking on your feet. And that's the job requires that. Even if you're in an employed role, it's like a semi-hybrid self-employed role normally anyway, because you still have to be the person who's driving the business. So really useful if you can demonstrate that to your potential employer. So what are the employers looking for nearly all the time? They're always looking for knowledge. So they want someone who's got a really strong understanding of the mortgage products and the regulation behind it, meaning the compliance behind it. So these are the things they're looking for. They're looking for that. Why are they looking for that? Because it's one of the hardest things to teach. It takes too long. Remember that when someone is employing you, the faster you can get from being incompetent to competent is the value. That is by far the biggest hurdle for most people employing somebody, especially if you're trying to go to a smaller firm. Let's say it's like a one-man band who's trying to then bring somebody on. You can eat up half of their working time. So knowledge is vital. So staying on top of how the mortgage market and mortgage products work, sign up for Mortgage Introducer, sign up for all those things. Do that because it is mortgage strategy. Stay on the industry right now. Demonstrate that. This is what they're expecting. It's your job to be on top of it. It's called CPD, which is required by the FCA anyway, which is called Continuous Professional Development. skills, again, they're looking for that excellent communication and problem solving abilities. They're looking for somebody who's going to deal with the problem themselves and not come to them constantly saying, help me. They want someone who can problem solve. All of the time, they're looking for somebody who's not going to take up their time. You need to demonstrate that. So this is what they're expecting from you. And the attitude is they're looking for somebody who is positive, so effectively upbeat, and they're also looking for someone who has a client-focused approach to work, meaning they want to put the client at the heart of what they do. Why do I say positive? I worked with somebody once who was miserable, and they sucked at the job. It was the most painful thing. They didn't want people to be there. It was like, oh, poor. It was literally be like when they walked in the room, you'd think that you'd apologize for the fact that you were actually there. It was ridiculous. You don't want to be like that. They're looking for somebody who is you're the face of their business at this point. In some cases, they may never even speak to the original employer. They may only speak to you. And so you are the first thing they see, could be the last thing they see. And so they want to make sure you're positive and that you put the client first. If you are from an employed, what I call 9 to 5 background, you will not do well in this role. I'm stressing that right now, by the way. You will not do well if you think this is a 9 to 5 and clock out. You just won't. And you'll save yourself a lot of time and a lot of heartache. And I've seen this with good friends of mine who got into the role. They were very good at a sales or training role in a normal corporate company. They came in because they thought they could do it. And then 2 years later, they are burnt out and can't deal with it because it is not that. You've got to be somebody who wants to be very friendly, very forward, so we're still going through this. But as I've said, if you have any questions on this so far, please do head over to my Instagram. That is @ashborland. You can drop me a direct message there. That's the best place to contact me. Any questions, always happy to answer them. So please do that for me. And let's crack on. So once you've got this role, what we need to talk about now is we're going to talk about building your professional network. So we're now trying to build your career. Before, it's about trying to get the job. Now we've got the job. We now need to start to build your professional network and start to build out who you are. So once you're in this role, you can join associations. There are different associations out there. So you can be members of industry organizations if you want to. You can also join things like BNI. You can join other networking groups. There's property networking groups. So building up your professional network as a broker is everything because that is who is going to refer you business. Now, I'm stressing this here is from this point on, we're looking at this as the idea. Remember, this program is that this masterclass is about the idea that you're going to potentially move into a self-employed role at the end. So I'm assuming at this point, you're going to move into a self-employed role at the end. If not, obviously, and you want to go into management and stuff, that's fine. I doubt that will be the case if you'd be watching this because most of you doing this will want to go on your own. That's why you got into it. So this is what we're assuming. So everything up to this point has been all about qualifications and getting the job. Now it's about how do we build ourselves out so that we eventually can go on our own. So as I said, join associations, property networks, local networks, anything you can do to build up your network within your industry and also clientele. So your industry and your niche, they're two different things. So that's important. Attend events. So again, participate in any conferences, seminars, training. So there's all of those things that you can go to. So attending events like sales training, marketing training, property training, all of these things are going to level you up and make you a better person at the job. These are all things that we need to use in order to make that leap from employment to self-employed. So building up your training and your skill set, vital. And then engage online. So I've said this before, but now you're no longer, I said this at the beginning, like earlier about this idea of engaging in these groups, but now you're no longer the trainee, you are the advisor. So at this point now you want to engage in these groups as much as you can. If you were engaging beforehand, brownie points to that, even better. But now you want to start to engage even more through that so that what happens is you'll be able to build a name for yourself. And again, engage online also in things that are relevant to you, relevant to your niche. So let's say, for example, where I live here, I live in Cambridge, and we live in a small village in Cambridgeshire, and there's a village Facebook group, and that village Facebook group, I can engage in that, not sell my services. There's nowhere for me to sell to because of the way my business is, but engaging in that group and just being an active member in these Facebook groups and online, that will draw attention to you. And that will draw attention to you so that when you inevitably go on your own, you have an audience that's that knows who you are. So this is what you're building. You're trying to build this professional network from both clientele and also industry professionals. So social media, how would I do it on yours? Build your profiles, build out a professional profile on LinkedIn and connect with industry people within the industry on LinkedIn. So that's the first thing I would do, is make sure you get your LinkedIn profile, build it up to look like it is a B2B environment for people to see what you look like, what you're doing and how you work. And then Facebook, I would, obviously it's joining industry communities and groups, but also with Facebook, I would make this B2C. So make this customer focused and start posting content as much as you can around what you do. So post onto Facebook and onto LinkedIn about what you're doing, but make LinkedIn about what you do as a broker and what about it so other brokers can comment on it. So it's observational. And Facebook, make it all about what you do for clients and some of the things you've helped clients with. Do this even if you're employed. It's okay. Ask for forgiveness, not permission. If your employer tells you off, tough. Talk about it. Oh, I just did this with a client. It was really great. This happened. It was able to help them. Focus on that. You'll notice on here, Instagram and those, I haven't mentioned them in the same way. The reason is Facebook is going to be the lifeblood of where your client's going to come from at the beginning. The others are fine, but I'm really looking at this and focus on the two. If you look at the mortgage marketing blueprint and the other stuff we go into, it's a lot more that we go on all of them. And it's that. But for now, if we're making it simple, LinkedIn for B2B, so industry, Facebook for B2C. It is much easier. Don't set up, this is a big cardinal sin, do not set up a new Facebook page for your mortgage business. You are now a broker. If you're doing this now, you're doing your qualifications, you now need to use your existing client bank, your contacts as clients. That's going to be your first real set of clients. And this is what I see brokers do. They'll go and they'll set up, and then they'll set up on their own, or they'll set up as, I'll go self-employed or employed even, and then I need to generate leads. Then they go and set up a new Facebook account, John Smith Mortgages, and then nobody follows it because no one cares. But if you have 500 to 700, 1,000 Facebook friends, and you start sharing, people following you on Facebook, and you start sharing content about mortgages, some of them will need a mortgage, some of them will come to you. Yes, it might be a bit weird and a bit icky, it's fun, but it's not. It's absolutely fine. That's what you should be doing. Do not get caught up in that trap. It is the biggest, massive separator from whether you will be successful or not at the beginning. Otherwise, it's a real uphill struggle to do that. Business accounts are not needed at all. Creator accounts, switch your account to a creator on Facebook. It doesn't break the terms and conditions. You'll be fine. Once you're in there, you want to find a mentor. So mentors, that's literally what I do. I'm a mentor, I'm a coach, I'm a consultant. You need to find a mentor who's going to take you through the journey of what you want. And there are multiple different mentors out there. There is Mortgage Mentors or Mentoring in Mortgages, I think it's called, the website, where you can go and get a free mentor from people who are like more running their business. That's one of them. There are other mentoring programs, stuff like what I do. There's other ones out there like Gary Das, who does one. And also, like I said, Paul Archer, who does them. But effectively, a mentor is vital, because what a mentor is going to do is that they're going to be able to guide you through the process of doing the job and hopefully avoid the pitfalls and just keep you accountable. Now, when you find, how do you identify them? So let's talk about that. So identifying the potential mentor, you want to look for experienced professionals in your network or someone who name comes up regularly, or somebody you've spoken to who you're like, I would like to do what they do. And then approach them. So how do you approach them then? Well, you approach them respectively, as it says there. You want to make it very clear to them, look, I'm really interested in what you do. I love what you do. I love how you've done X, Y, and Z. So give them examples. I would really be interested in learning from you. Okay, so I'd really be interested in learning from you. And that people like that. People who love this job and love any career will be happy to mentor you. Like I said, I mentor 22 clients at any given time. That's my client bank. Obviously mine is paid because it is a significant driver of getting you a lot more money. But there are, like I said, friends and family who will probably do it for free if you've got someone out there. So a mentor can be anybody. I've had paid mentors, I've had free mentors all the way through my career. They're different for different things. What I would say is the paid ones I get more from, but the non-paid ones it's a different relationship. So for me, for example, I actually mentor people in financial services, obviously as my career, but then I also do mentor a select few people, not many, which is free mentoring on people who are doing a similar career to me. and most, none of them in financial services, but like people who like, that will have phone calls, will catch up. So people will do that if you're in a different career. So the people will do that. And that's important. And the other one there is establishing expectations. So agree on the mentorship goals with them and ask what the frequency is. So if you approach and know what that is, any good mentorship, for example, with me, it's every 2 weeks. Any good mentorship will have a frequent meeting and will have clear goals of what you're trying to achieve. But if you don't have a mentor, it's going to be hard. It's going to be hard for you to stay on track. It is just going to be hard. Like very few people I know can be successful without some form of mentor. And they might think they have been. They'll say, oh, I didn't need a mentor. And then if you look through their career, it's either that person was your mentor, you just haven't given them the credit, which is the last thing obviously you want. So we need to talk about CPD, or continuous learning and development, which is what mortgage brokers have to do by regulation, really. It's part of your regulation. But it doesn't mean that it doesn't mean that you shouldn't do it above and beyond that. There's a certain level you should. Now, these are the 3 areas I recommend any mortgage broker who really wants to smash their career focus on. So the first thing they want to focus on is keeping ahead of all industry changes and regulation changes. Really easy to do. The mortgage lenders are going to send you, and every single day they'll send you any updates that come out about what their criteria is. Read the emails. Read them. Do not chuck them into a drunk folder and say, no, I'll read that later, or not interested. Read them. If you read them small, just a little bit as they come in, end of the day, just catch up on the emails, or in the morning, catch up on the emails from yesterday, read them. You will stay up to date. If you stay up to date, you will be able to navigate this space significantly faster than most people. One of my most successful clients, who is multiple six figures, we're talking like $750,000 with themselves and an administrator. The one thing when I asked that person, I said, how are you so successful at this? And the guy said, I read those emails and I just constantly stay up to date. Obviously there's lots of things as well, but that's how he's able to not get caught out. And if you're trying to be good at this job, the last thing you want to be doing is redoing it again and again. Stay updated. The other thing you have is advanced certifications. So you can get your advanced mortgage qualifications, you can get your equity release qualifications, you can get your insurance qualifications, you can get your IFA, so wealth qualifications. There's lots of different advanced qualifications you can do in order to develop your career. It looks good. It does look good to a client, depending on the type of clientele you're with. It can also warrant charging higher fees. So for example, one of my clients is a fully certified IFA, so independent financial advisor, but he predominantly does IFA work too, but he does mortgages most of the time, but his mortgage fees are £1,500. And they're £1,500 because when he speaks to me, he's like, look, you can go and do it with a mortgage broker, or you can come and do it with me as an IFA. I'm significantly more qualified. The clientele he works with, they want that. They pay it all the time. So advanced certifications and qualifications really do separate you from the pack, because again, most people just do the minimum requirement. And then soft skills training, which is again, leadership, sales, communication. Also, I would put marketing into this. Staying ahead of business development is really important. So those 3 things, if you work on those 3 things continuously and you just focus on how can I be up to date with what's going on in my market, improve my own qualification and how qualified I am, and then also my soft skills that can't be seen through qualification, you will do very well, more than most people. If you do those 3 things, by the way, you'll be in the top 1%, for sure, because people don't. And I'm putting them in here, and even when I was making this, I was like, no one's going to do this, because no one ever does, apart from the people who I work with, because I kick their ass to do it. But that is what separates them. Separates the winners from the losers, is that very specific difference, and it is crazy. So how do you get clients to become like loyal and stay with you and refer everybody? Okay, really simple. And we talk more about it in the mortgage marketing blueprint, but client relationship management, focus on these 3 pillars: communication, personalization, and follow-up. If you focus on communication, meaning that you maintain regular, clear client communication, so in the mortgage business mastery system, which is the system I work on with my 21 one-to-ones, there's no courses on that or anything like that. That's the main system. We talk about that there should be never any longer than 2 weeks. So 14 days, never any longer than 14 days from when you speak to a client to when you don't speak to them again. You should always have communication with them at every 14 days, even if there's nothing, and preferably more, but every 14 days. And the reason is because it's going to keep the client feeling like you're doing something for them, that you're continuously moving forward. So really important that you maintain regular, clear communication. Do not fall into the trap of thinking that if there's no update, that means there's nothing to send. The clients, when you're working with them on their mortgage, people will be looking at this. With their mortgages, they're coming to you as their guide, their coach, their broker. That's what it is. You're guiding them through it. You're coaching them through their home buying process, or you're coaching them through their debt consolidation. You are the coach for them. And if you don't stay in contact with them, they will feel rejected, and then they'll turn. And if they turn on you, you won't get the business, and they will give you, or you might get the business, but they might write you a bad review. They might not recommend you, and your business is done on referrals. So really important, which leads me to the second one, which is personalization. So tailor your advice to each individual client's needs. Do not do a cookie cutter approach of everybody gets everything. Even in my own system, in that mastery system, the mortgage marketing master, or the mortgage business mastery system, even in that, it is tailored so specifically to each individual person, because that you know what you do. You have tools in a toolkit, but the job for you is to look at the client and see how their situation is, and then applying it to them. This is how you will get better insurance sales. It's how you will get better mortgage fee closes. It's how you will get better referrals. If the client feels like the product is for them, it is for them. It's really vital. And again, why are we talking about all this stuff? Because this is the stuff that if you want to go self-employed, and we're setting you up from an employed role to a self-employed role, you are learning the skills. And this is why I'm a big fan of this. Learn the skills on the payment of your employer so that you can be an absolute weapon when you go on your own. Nail these down. The biggest mistake people make is they sit back on their laurels, they get fat and lazy while the employer is paying for them and feeding them leads. They go on their own, and then they're like, oh my gosh, what now? Don't fall into that trap. Do not fall into that trap. This is the biggest mistake. Instead, learn. So personalization for their advice, making the client feel like it's tailored to them. It's how it makes them feel. And the final one you have is follow up and implement effective post-follow-up strategies. So after the mortgage has been completed, how are you still following up with that client? Are you doing an annual review? Are you in contact with them? Biggest one, if you're employed, are you connecting with them on Facebook? This is my favorite one. Connect with them on Facebook. Build up on Facebook. You like the client? Great. Love it. Connect with them and then send them a message. Why are we doing that? Because you want to be able to keep contact with this client. You can't take client data with you when you leave as an employed role. You're not allowed. It's against the law. You'll be sued. But you can take all your Facebook friends because they belong to you. So follow-up system literally being like one of the systems that I used for a follow-up system, very simple, is if you go on Instagram, you can actually set, if you click on the Instagram tab at the top, you can actually, there's a little star, it says favorites. If I press favorites, this literally is everybody. For me, it's different stuff. But what I say to my broker clients, this favorites tab, just favorite anybody you've done a mortgage with. Just anybody, add them as a friend on Facebook, on LinkedIn, on Instagram if you want to, and favorite them. And Facebook as well, I do the same, but you can't favorite them on Facebook. But within Instagram, if you want to use that, add them on there. Just follow them on there. You just add them because you can follow them. They don't have to accept your request. So follow them, star them, put them into favorites, open up favorites, press the favorite tab. Now you have a list of every client you ever worked with. It's just a roll of all the people that you've ever worked with in your favorites. It's no brainer. But that will allow you to be in contact with them. It'll allow you to connect with them, talk to them, and that will then move when you go self-employed into the ability to be able to have some business, which is the hardest bit. So let's talk about now this transitioning to self-employment. How do you do it? There are 3 things I would normally say to look at before you make the jump. Do not make the jump before this, whatever you do. So the first thing you want to do is do a self-assessment of your skills. Do you genuinely think, hand on heart, right now, you are good enough to go on your own? The reason why I say this is many people romanticize it. It's hard, it's tough. And so getting it right first time is important, I think. So look at and being a mortgage broker, the skill set and the learning curve is very steep. So look at your skills, and I can give you a story of myself. When I qualified as a broker, I I had done the job for about 3 months. I was doing well. I was doing well straight away. Like, I was like Cass and writing business for 3 months. And I was doing well. I got approached by a very good opportunity with a local estate agent of mine who was top notch. Like, they were one of the best. And they also had a mortgage broker in there, and they wanted me to come and head that up with them. And I'd only been there 3 months. I was headhunted because I was good, but I'd only been there 3 months. The job was offered to me. It would have been an amazing opportunity, but I had to turn it down. And the reason why I turned it down is because the self-assessment of my own skill, it was a self-employed role, and it would have been, you figure it out on your own. But I realized working at Connells needed that support structure, because I was only going to get better by being exposed to more and more people. And I needed to be able to know how to do the job before I could go off and then learn how to do it as a self-employed. They're two different skills, and it's very hard. And it takes honestly about 2 years for most people to become a semi-decent mortgage broker, to know the job, to know the products, to know the market trends and stuff like that. So I turned that role down, and then 2 years after that, I then went on my own. But I went on my own under a different firm. It was a whole different thing. Another opportunity came up, and I was ready to go. Evaluating yourself, there's nothing wrong with saying, I'm going to give myself 2 years. Most people will lock you in for a 2-year training contract anyway, which means you have to pay back any guaranteed commissions or debts that you've accrued with them. But first thing is being self-aware. If you think that you have, like I said, the skills and also the financial stability to be able to go self-employed, then that's a tick. If you get a tick in that box, go to the next one. The next one then is create a business plan. You need a business plan. If you're going on your own, it's how are you going to generate leads? Where are you going to get them from? Who are you going to, again, mentoring? Who are you going to get to support staff? How long till you're going to get an admin? Will you get introducers? All of these things, you need to write it down. How much is it going to cost you to run the business for the first year? What would happen if do you have enough money to run it for the first 6 months without any income? You need to look at this and plan it. Business plans, without a business plan, you will fail. You need to have a business plan. So develop a comprehensive business plan, and then go and look into the legal requirements that you need to go setting up on your own. So for example, with that could be things like setting up your limited company if you want to be limited, or going sole trader if you're going to be sole trader. It's going to be getting any of the insurance, potentially what the insurances would be required for you to have the job. It would be the FCA regulation and requirements, and that would be like registration, that would be done through networks. So what you do there is you would start to speak to networks, go and speak to Connect for intermediaries, go speak to New Leaf, go speak to Primus, go speak to Stonebridge, any of these networks out there, start to talk to them. And then from there, you'll be able to then get a clear idea. That's the main thing you need to think about. And if there's a tick in all of these, then you can move on to the next step. Now, the next step from this is setting up the business itself. So as I've said just then, you need to decide on sole trader or limited company. I'm not an accountant, so please understand that. But there are two different things for this. Sole trader is fine. Oftentimes, you're advised by the networks to start as a sole trader and set up as a limited company later. If your turnover is below about 80,000, it's not that big a deal. It's easier to be sole trader, is what I was told when I set mine up. And so I did that for me at the beginning. Limited company is better if you think you're going to write more quick, and also if you think you're going to be taking on staff and stuff like that, because obviously it's a proper company at that point. But both are different. They both have pros and cons. Decide for you. But you don't have to always go down the limited company route. I didn't originally, and I haven't for multiple different businesses over the past. There are pros and cons to both. So it really comes down to what you want to decide. But choose your structure for you. Seek accountant advice on that, your tax advice on that as well, as to what you want to do. From there, you register your business. So again, all of this, most stuff, you can do it on your own, but I would probably recommend you get an accountant straight off the bat for this. Register your business, so complete the necessary registrations with authorities. So this would be, again, setting up the business. If it's a limited company, setting up with your accountant. It would also be going to your network. So like I said before, now a network, for people who don't know what a network is, a mortgage network is somebody who does your compliance in the back end for you. I have, again, a really great interview on this, and I'll put it in. It's the same one, which is about getting CAS, and it's all about, I had the head of training from Connect for Intermediaries, which is Jim Selly, come on and talk about what a network is, how you get CAS through it, how it works. So great episode. But what's important about this is those people they're the ones who will go to the FCA, they'll register you with the FCA, they'll deal with your compliance, they'll do all of that stuff. When you're going on your own, you need to have a network. You can also later on become what is called directly authorized, where you do it all yourself. But going on your own, you pretty much nearly always need a network in some way or another. So get registered the business is going to be with the network. So choose your network. Then from there, you have to set up an office. So when we talk about set up an office, you decide, do you want to establish a workplace? Now that can literally be your bedroom. It can be an office. It can be whatever you want, but make sure you have a place that you can work that is good enough for clients to see you on Zoom calls, because you'll be doing most of your appointments on Zoom most of the time. So Zoom calls, place that you can work. So dining room, if it's quiet, if you've got kids running around, I have my office in the garden. Otherwise it would be two kids and they'd be mad. So it's not going to happen. But like most people, you want to make sure you've got that place straight away. If you think you're just going to do it in your kitchen dining room table or your kitchen dining table, no, it's not going to. It'll be all right, but it'll be hard work. And clients will also not like that. You've got to have you can just literally have again, I've got a lot of clients who work in their bedrooms, but the camera is just angled away from the bedroom. So it looks like a nice room. It looks like an office. It's fine. It doesn't need to be fancy. It just needs to be clean and presentable. And then you need to have the right type of equipment. You need a laptop. You're going to need a decent camera, because you'll be most likely doing Zoom calls. So camera being like a webcam or something. But outside of that, that's pretty much it. But set that up so you know what you've got to have. And then you're going to have to obtain your insurances. Your insurances will come from your networks a lot of the time. So that will all be covered within your network fees. But these are the steps to setting up your business. Very simple. It's not as hard as I'd expect. First thing really is go and speak to networks first. Go and speak to networks, and then if you choose the network you're going to go with, they will then guide you through all of these steps. They have complete onboarding teams that will do this for you, with you, not for you, but they'll do it with you. So don't worry if it looks like a lot. It is a lot, but it's designed to be a lot. Now you need to talk about marketing your services. And marketing your services, this is just really light overview, because obviously I have an entire module, which is like my entire course, which is my flagship course of the Mortgage Marketing Blueprint, which if you get to this point, that's exactly where you need to be going next, is website. You need to have a professional website. You need to have a website for your business. You will also need to have a professional email. So choose your business name, get the email, get the website, get the domain for it. Buy .com. So don't get .co.uk or no. Get all of them, but make sure if you can, little pro tip for marketing purposes, if you can get .com, it's going to be better. It's actually valued more. It's seen as a more reliable website. But let's say, for example, me, ashborland.com is my website, but I also own .co.uk, .org, .gov, because that's government, .app. Buy them all if possible. Don't let anybody have the domain. Own your domains. That's really important for your website. Then you can just build one. You can build it on Go High Level, which is what I'd recommend. I'll put the links to that in here as well. So that's where the Go High Level is the best place for building your business. But there's Go High Level. You can do it in Wix, a place like that. But I recommend Go High Level for that, for a full business CRM suite. So just build your own one. Don't worry, make it fancy. Just build a basic website, landing page, someone to be able to book in. You then have social media. Again, the same names and handles for your business, get them on social media too. So if your business, like mine is Ash Borland, it's at Ash Borland. But if it's Mortgage 101, get Mortgage 101. Get the name of the business where possible. And then start from there making content. Now I talk about the content in the blueprint, in the marketing blueprints. I'm not going to go into that in here, but it is vital for that. And then with the networking, what you want to start doing is tell the world that you are now open for business. So all of the stuff we've done throughout this masterclass of adding your clients and networking with them in groups and building up your professional network, you're now going to showcase to the world, this is time to go. I'm open for business. And if you've collected all those people, you've cultivated those relationships, you will have people interested. You will have people interested in the job. You just will. In working with you, because you would have built the back end beforehand. This is why this is why this blueprint is here, is because it's not simple. It's not something just like not like a go on your own and now everyone comes. It's not that. And when you start at the beginning of the module, it's very heavy, but the whole masterclass, but as you go through it starts going, oh, okay, it makes sense. That's why we're doing these things. Yes, there's a plan to this. You want to make sure you're launching it, making it really clear. So then what other stuff do you need to think about? You need to think about the operational management. So time management is a big one. Default diaries are important. So you need to get good at implementing managing your time. If you're going from a self-employed role to a self-employed role, you're going to go from a place where most of the time where your diary is managed for you, and all of a sudden you have to have control of it. If you don't have a default diary of some sort straight from the beginning and manage your time correctly, you will be run ragged. This is literally one of the things we do when I work with people in our mentorship. Is that because it's big. It's a big problem. It's a big problem. Time management is probably the main one. From there, you then have client management. So client management is keeping track of the clients and who they are. So we did a basic one, obviously, with this idea of using Instagram to favorite them, but you then need to move to the next levels, and you have multiple ways of managing clients in different ways. That's a more client communication management, but you can have client management tools where you keep track of everything the client does. Now, for me, the client management tools I use, again, is Go High Level. It does all of that within this, but I also use OneNote, which is a noting software, but you will also be given a CRM system from your network, which is a mortgage CRM system. So they are different. A mortgage CRM system is where you're going to submit the mortgage applications and keep it all there for compliance. It's a compliance system, but you do need your own client management system where you manage all the stuff you're speaking with the client about and everything that's going on with them. And that's why I said I recommend OneNote and Go High Level combined, but those two are important. Client relationship management is really overlooked. Many brokers will literally just use their one the network provided them. It's not fit for purpose. It's not fit for purpose of managing the client relationship. It's fit for emailing, storing all the documents and making it very like packaging the mortgage offer, but it's not clear for you being able to manage your actual interaction with the client. And the other one, like I said, is document management, which is usually going to be done through your compliance system. So your network system that they give you, they'll give you the mortgage system. And that will be where you store documents and sensitive information, and that's all encrypted and it's stored. So that'll be part of that. So those are the three things you need to be very aware of when it comes to operational management as a mortgage broker. When you're going on your own, be very different from when you're self-employed, when you're employed, because this will all be done for you in the back end. But this one, now you need to be clear with that. So let's talk about the elephant in the room at this one. This is all caught everybody who's gone self-employed. Everybody's gone self-employed has got caught out by this all the time. The financial management of being a self-employed broker, you need to focus on four main things. So first one, budgeting. Make sure that you have a detailed budget for your business. You know exactly what it is your spend is. How much can you spend towards marketing? How much can you spend towards mentorship? How much can you spend towards software? How much can you spend towards equipment? You need to know. If you're just spending because you've got the money, you're going to catch yourself out. Number two is cash flow. You want to monitor and manage your cash flow all the time. This is your pipeline. Where is money coming in? Where is money coming out? Monitor this and stay on top of it. If you don't manage your cash flow and monitor your pipeline, you will fall foul at some point, unless you're just absolutely insanely good at the job, in which case you don't need to worry about it. But it can be a big problem. You need to know what it is. It's money in, money out. If you don't monitor your cash flow, you're going to get stuck. It's just a big problem. The third one, tax planning. This catches everyone out. It caught me out in the beginning. It's caught everybody out. Understand and prepare for your tax. You are going to have to pay tax. You will start to make more money. A lot of people who go into this role will make more money than they've made potentially previously, long term, not straight off the bat. But once they start making the money, they start realizing, they start thinking, oh, okay, I'm doing really well. And the next thing you know, the tax bill comes and it's hefty. And by the way, like it's a lesson I've learned with this, more money, more tax. And the tax bill gets massive, like very big. Like tax bills, some of my tax bills have been bigger than my tax bill is bigger than my income for the first 3 years of my career. That's how terrifying the tax bill is. And that for me, career at the beginning, when I worked in mortgages. So it is pretty crazy, the tax. And I don't mean that you can make lots of money. You can make lots of money, but the tax can be a stinger. Now, the other thing to remember with this is, and to factor this in with tax, I'm not an accountant, speak to an accountant, but mortgage brokers do not have to charge VAT. In fact, you can't charge VAT. You are VAT exempt. So that is important to point out, which means if you hit that 90,000 bracket for VAT, you don't have to be charged VAT. This does also mean, by the way, that everything you buy, you cannot claim the VAT back. So that's important to point out. Very important to point out, something that comes up in mind. I have to charge VAT, for example, when I work with people if I'm working with people and stuff, if within my line of work, if I as a coach consultant, because I'm not in that, I would have to charge VAT. You aren't allowed. It means you can't claim it back. So it's important to know that. And it's important to know that your accountant knows that. I've had brokers say to me, oh, my accountant says I need to get VAT registered. And it's, no, you don't. What are you talking about? And then the final one we have is financial reporting. So like I said, maintain accurate records for compliance, because you are in a regulated environment. Make sure that your financial reports are up to date, that you're clear as to what you're making and how it works, because at any point the FCA could ask for those, and you need to make sure that you are that you've got them there ready to go. So we're coming into the home stretch now. So let's talk about business growth. So once you've set up on your own, these are the type of things that you can grow into. So you can expand your services. You could offer, if you want, this is how you can increase your income and stuff. So you could offer additional financial products. So insurances, you could offer solicitors, all those type of things. You can do that. You can also build a referral network. So you can have things like introducers and places where, so estate agents, accountants, you could build friends and family who refer in. So referral networks is a great way for you to start to build more business as well. And this is a professional referral network. It's known as introducers. You can also get referrals from clients, which if you do the job well, you will get. But building out your referral network is another way of increasing income. I'm actually going to do a blueprint on this, of the mortgage income blueprint, which is another thing. But this is just a brief overview. This is just 4. There's 8 that we really focus on. We go deeper. The third one you can do is you can hire staff. So if you're getting really busy, you could bring on employees. A big one with this would normally be to bring on an administrator. So the first person you would probably bring on is an administrator to start to do admin for your business, and that will free you up time that you can start to do more business. And then from there, you might bring on multiple administrators, or you might decide to bring on another advisor. And then you also have the continuous improvement. So growth for the business can come from improving yourself, improving your processes, speeding up your processes. And that, again, like I said, is the type of stuff that I do all of these with people I work on, all 4 of these. But these are the 4 ways, the main ways in which you will grow your business once you've gone off on your own. Again, this isn't really, these bits here are not for you to do. I'm just sharing what the kind of next steps would look like. You then have long-term business planning, which is, I would advise you start to define what your long-term goal is for your mortgage business now that you're up and running on your own. Go back to that business plan and develop a strategy for this. Now, I'd normally do, for your long-term, I would do a 5-year, 3-year, 1 year, and then a quarterly goals. That's what I would do. So I do 5-year, 3-year, 1 year, quarter. And we'll go through those, work your way through them so that you're able to understand exactly where you're going. And that would be your strategy. So you develop a strategy around that. So create your plan of how you're actually going to go through those goals. So what do you need to do in quarter 1, quarter 2, quarter 3 to hit your yearly goal? Again, set another yearly goal. And every year, by the way, you just move it. So set that out. I'm religious at sticking to this. Monitor that progress. So I would monitor that progress towards your business plan every week. And then I do a small monitor at the end of every week. And then I do a large one at the end of every month. And I do a really big one at the end of the quarter. Did I hit it? So that's what I would be doing. And then adapting. It's okay if here's the little tip here. Your 5-year goal is never going to happen, because and most likely your 3-year goal won't happen either. And the reason is because as you apply, if you go aggressively after your 1-year goal with those 4 quarters, you will most likely surpass your 3-year goal within 18 months. So the goal always changes and adapts, and you'll see that as you go through it. But what people don't realize is, like I said, how much that actually happens. And so if you don't have the plans, 5 years down the line, you'll still be here doing the same thing, and everyone who's done this will be way ahead of you. Which brings me to my final tips for your success. And this is really the final tips, but it's the start, hopefully, of a relationship with me that you guys will see through my content. And hopefully, if you're lucky enough and I'm lucky enough to be able to work with you in the future in regards to availability and stuff, then that'd be great. But let's talk about when you're actually ready. So let's talk about final tips for your career success. First one, stay ethical. This career is a very lucrative opportunity, and you can make a lot of money within this role, but you need to stay ethical. If you do not stay ethical, you'll lose yourself in the industry. And it's sad. And I see this happen a lot where people start to see the money over the client. One of my clients, I love this quote. She says, conscience over commission. And it's that. Stay ethical throughout the whole journey. In your employed roles, if there's any pressure on you to do things that are unethical, don't, just keep going. But make sure, to do the ethical thing, always that's very important. The second one I have is embracing technology. This industry is massively technology adverse. You have people who talk about that they're not, but they are outliers. The vast majority are technology adverse. It's an older industry, and they're quite archaic in the way they are. Embracing AI, embracing tech, embracing marketing, embracing social media is going to give you the cutting edge and that many of your competitors will not have. So embrace that. Do not run away from it. It's very valuable and very useful. Client-centric approach. Always put the client at the center of what you do. And this might contradict some of the stuff you hear me talk about later if you start listening to my podcasts. But my client is always still at the center of everything. Doesn't mean the client gets what they want. The customer is not always right, but it is a client-centric approach. It's always about what the client should have, not what it may want, or they're like a child in that way. You don't give them everything they say, but what you do want to do is make sure that if you're doing it for yourself, you will lose. If you do it for your client, you will win. If you prioritize their needs and what they actually need and take that role on and that responsibility on yourself, you'll do very well. And then the fourth one is continuously learning. Never stop learning. Never. This career is moving at breakneck speed. The industry moves fast, and yet everybody moves slow within it. And so if you can move fast, you will do well. It really is that simple. That is the mortgage career blueprint, guys. And I put a lot of time into making this. I hope you enjoy it. There is nothing for me to sell you at all. If you have any questions, please do, like I said, add me on Instagram and check out. And I would say, if you're wanting to go further with this in regards to like your learning, check out my mortgage marketing blueprint, which is the one which is for self-employed advisors. But if you want to learn more about it, you can. Also, check out my 2 podcasts. I have a solo podcast called The Mortgage Business Mastery, which is my flagship program. And that is a show where I just talk. That's for brokers who are advising right now. So some of it might not be relevant for you, but you might find it very useful to see what's happening in the industry. I'd very recommend you do. And that's a solo show, just me talking like this, the more and more. And then I have the Mortgage Maverick show, which is an interview show where I interview people all over the industry, from people getting into the industry to some of the CEOs of the largest networks and fintechs and everything in between. And I'm lucky enough to have done that show, and that show has been ranked in the top 20 marketing charts many times because of that. So I'm very blessed to have that. That is pretty much it. And yeah, I wish you all the best in your career. I think it's such an exciting time, and hopefully one day you will be successful enough to knock on my door and say, Ash, let's work together. That's the ultimate goal. Anyway, for me. Anyway, I'll love you and leave you. See you later.